Hey everyone, Lawrence Mack here, real estate broker out of Mississauga. I'm here today with Chris Mulder again, principal broker at Trideck Mortgage. Hey Chris, how you doing?
Good morning, Lawrence. Good to see you. Thanks for having me again.
Yeah, not a problem. It's always good information. Today I wanted to talk about gifting. This has come up a lot with a lot of the buyers that I have, especially the first-time buyers. As you know, the real estate market is going a little bit crazy and the prices are going up. And right now it's been a problem for some. Well, before they were kind of borderline qualifying, and now with the amount of down payment that they need, is very difficult for them to buy a home or qualify for one. And so I wanted to talk to Chris today about, for example, if you were to get a loan or some money from your parents to help out with the down payment, what's involved with all of that? So Chris, what can you tell us?
What can I tell you? Well, I think you're right, Lawrence. I mean, gifting is becoming more and more prevalent. And just last month, chief economist of CIBC, Benjamin Tal, came out with a report focused specifically on gifting and the phenomenon that it is. And what they found was that approximately 1/3, so 30% of purchases in Canada, right across the country, the purchasers relied on a gift from family to make that purchase happen. So that tells us a lot about what is happening in the real estate market and how unaffordable things are happening. So I think the gift really signifies this transfer of wealth, because if you own a home, parents own a home, the value of that home keeps on going up higher and higher, keeps on getting harder for their kids to get in. So they're transferring that wealth through a gift. And that's what we're seeing predominantly. And anecdotally, from my own experience, Lawrence, I'm sure you know this as well. Most first-time home buyers that we're working with are getting a little bit of that help from mom and dad.
For sure. Definitely bank and mom and dad are helping. So what is the process for that? Let's just say we have a first-time buyer, they want to go buy a home, or just any buyer really, and they need an extra $100,000 for the down payment, let's just say. What's the process for that?
Yeah, it seems simple, but it is when you actually start to think about the question. There's some subtleties that do matter.
Yeah.
So first of all, what is a gift, or what is acceptable as a gift when it comes to financing, mortgage financing? Because you have to understand, lenders, as part of their underwriting, one of the cornerstones is verifying the source of down payment funds. Mm-hmm. So whether it's your own sources or coming from a gift, that's fine. But who can gift and how it's gifted, there are some parameters around that. So the first thing is who can gift. Specifically, it should be a related family member. Okay, so related means mom, dad, grandma, grandpa, aunt, uncle, siblings. Mm-hmm. But if it starts extending beyond that to friends, for example, friends are actually not an accepted source of gift. And occasionally that does come up. My friend is gifting me, and the lender goes, well, what type of gift? What type of friend is gifting out of the goodness of their heart? That's probably a loan or some other business that's happening there. So it really should be a direct relationship. When a gift is provided, the giftor must sign a letter. Each lender has their own template, and the lender will actually call to verify and say, hey, Mr. and Mrs., it says here that you gifted your child X amount. Is this true? Did you do this of your own free will? And is it a gift? Right? So there will be a verbal verification. And then lastly, the giftee, the person receiving the gift, must demonstrate that those funds arrive into their bank account, or sometimes it gets used as the deposit on an offer. So we have to just verify that those funds were actually received.
Great. So let's go for like a simple example, best case scenario. Buying a home, parents are, going to give you $50,000, part of your inheritance or whatever. Okay. We're like free and clear, give you $50,000. They just transfer from like their checking account over to you, and then you can use it. Down payment, everything is like all free and clear for the bank purposes for the down payment.
Correct. Generally, the bank would want to see funds received at least 2 weeks prior to your closing date.
2 weeks,
okay. Safe. Yeah. And if those funds are coming from another Canadian banking institution into your, this individual's bank account, that's totally fine. Give the gift letter. And it's as simple as that. There are no tax consequences for receiving a gift. And that's fully or totally acceptable to the lender.
Okay, so that'll be the best case scenario. No taxes. 2 weeks before closing, they put the money over. Everything looks okay, and you have a gift letter, is what you're saying. That this is a gift, and then they call and verify with everybody it's a gift. Everyone's happy, and we move forward. So that's best case scenario. Good. Okay.
You got it.
Now we'll go for the more complex scenarios. So,
okay.
Parent out of Canada decides we're going to transfer over a whole bunch of money. Say $100,000. How long before that's good? How much can they bring? Is this acceptable to the bank?
Yes. For purposes of underwriting a mortgage, so I'm not making any comments on rules around money movement from the source country.
Okay.
Some jurisdictions have rules about how much money can exit the country. Okay. Yep. So I'm not making any comments about that, but for purposes of the mortgage, when funds come from outside of the country, which happens all the time, very common, the banks want to see that money in the borrower's bank account at least 30 days prior to the closing date.
So about 30 days. Okay.
Yeah. And that includes money moving from the US as well. Had issues with that.
Between different provinces, okay? Because it's just Canadian banks.
Yeah, different provinces are okay. If it's within Canada, that is fine. And since we're on the topic, I know we're not talking about other sources of down payment, but sometimes people have money outside of the country and move it into Canada. And it's ditto for that as well. The lenders want to see money gestate in your account for 30 days.
30 days. And then the source of funds, like for depending on which country, I'm sure some countries are blacklisted or something, but depending on the country, then what's the process for that out of curiosity?
Yeah. So gift letter, still need the gift letter.
Yep.
And then when funds are wired or transferred, a transaction receipt from the country of origin.
Okay. And that's roughly what's required. So about a month's time, transfer the money over. Okay.
Yeah.
So far, so good. And what about, is there a limit to the amount of money someone can gift? Like they want to gift you $2 million, $1 million, and you buy like a nice house? Like,
well, we start running into some of the FinTrack requirements, reporting requirements, and you as a realtor would have to make some comments about that as well, right? It gets reported and recorded, and that's all to assist with the tracking of money and money laundering, essentially. But if it can be verified, there's no reason why funds can't be transferred in a large amount. Depending on how the mortgage is approved under what program, some mortgage programs require that borrowers have a portion of the down payment, usually 5%, from their own funds. And that's specifically true of the new to Canada programs. So if you're a newcomer to Canada buying a house, you have to have at least 5% down payment from your own sources, and then the rest may be gifted.
So same thing here. You might be able to go for less than 20% down payment with a gift?
Yes.
Okay, but you would probably be required to have 5% at least of your own money?
Correct.
Is that
yeah.
roughly how
it works? Yeah, but there are, it is possible to secure a mortgage with 100% of the down payment coming from a gift. There's no specific rule against that.
So let's talk about the idea of gift versus a loan.
Right.
Which I have been asked about and can't make any comment on. So why don't you make a comment on that? Where, it's a gift, but not really a gift.
Yes. The lender, there is an expectation from the lender that on presentation of money to assist for a down payment, that it is gifted.
Mhm.
If it is deemed to be a loan, then that needs to be accounted for in the mortgage application, in the underwriting, that money has to be returned. And that very often can prevent a mortgage from being approved. So we do not want to cross that bridge of disclosing or telling. I'm not saying that we're obfuscating facts from the lender, but on presentation, it should be a true gift.
Right. It's an actual gift, not a fake gift that you pay back later with some interest or something.
So if you tell me that it's a gift, it is a gift.
It's a gift. You got a letter, everyone signed that it's a gift.
Correct. Yeah.
Okay.
Now we know that behind the scenes within a family, arrangements may be different, and that's a family matter, and it does happen. Sometimes there are expectations that funds do get repaid, and I mean, sometimes it's not that the funds get repaid, but here's a scenario that comes up often is a parent is more than happy to gift their child the money for the down payment. That child then cohabitates with their partner.
Right.
Then after 12 months, they become common law, and then they separate. And when they separate, what happens? Well, the property gets divided equally once you're common law. And parents don't like that because they say, no. Well, I gave my money to my child.
Just to quickly stop you there, we're not going to get into common law stuff that technically that should be married. But anyway, so there are some rules in which the other spouse would get stuff.
Stuff. That's right.
Like things. So we're not going to talk about the common law part of it.
That's
anyway,
right.
Yes. And a lot of parents don't like that, obviously. You got married or whatever, and now you're divorcing and taking half the house or whatever.
That's right.
Sorry, go on. I just wanted to
clarify. And so one of the ways that parents, or one of the ways that can be protected, to protect that money and the intention of that money, is either a cohabitation agreement beforehand that says, hey, look, we're building a life together. If our life together doesn't work out as we intend, and sometimes it doesn't, then it's understood that this money was gifted to me and is not your money. And on occasion, parents will also secure that gift as a second mortgage or a loan on title, not meaning that it has to be repaid, but it means that it's secured on title and is technically assigned as a debt and not a gift specifically. And that allows the parents some form of control over what happens with that money when the property is sold.
Okay, that sounds good. So taking another topic about this. So let's just say the parents do want to help out their kid or their children, whatever it is, but they don't have the money. So they refinance their home or take out, mortgage or line of credit, whatever it is. Is that okay? And what happens to like the parent, I guess?
Great question. That is acceptable. That is fine as a gift. I'm going to put a little asterisk there because on occasion, a parent needs to also, as you know, with prices and qualification, especially for first-time home buyers, parents also need to co-sign.
Yeah.
Right, to help qualify. And if a parent co-signs, then they're technically on title. So technically it is not a gift any longer.
Okay. Very interesting.
Right? So if the parent is now on title, even though they're gifting to their children, from the lender's perspective, they say, no, that's no longer a gift because parents are now assisting with this. You're now on title. That mortgage money has to come from your own sources. If it is borrowed from a line of credit, that is acceptable. But now we have to add that $50,000 debt on your line of credit to the overall application.
I see.
So that is a common area where things get tripped up because say, mom and dad are going to help co-sign. They're also going to gift me money. And that gift comes from the line of credit.
That doesn't work.
Careful. I've seen that blow up a deal once or twice.
So the actual gift letter, is that like a lawyer drafts that? You write like in an email? Like what is like acceptable for the gifting letter?
Yeah. So Two things here. One is what is acceptable to the lender,
Mhm.
which is just a very basic template, identifying the parties, identifying the amount, and identifying it as a gift. So this has nothing to do with legalities of it.
Mhm.
It's recommended after the fact at the lawyer's office that if any arrangements need to be discussed or any clarification, that can be done via a lawyer's office. For
Mhm.
example, if there are terms to the gift, which sometimes there might be, or the cohabitation or the intention behind that gift, then that should be clarified at the lawyer's office, or even put in writing separately and notarized is another way that it can be done.
So really then, sorry, back to the down payment part. So let's just say you want to buy $1 million home and you have $0. So the parent gives you $200,000 for the down payment. That's acceptable? Like a given,
Yeah,
if it's a letter of gift, a gift letter, plus, it's been in your account for like 30 days and the sources are from a Canadian bank and they give you like the full down payment. That's all right?
that is totally acceptable.
Cool.
The lender will take it into account if there are other aspects of the application that are challenging for the lender. They may look at that and say, well, on the balance, listen, you're buying, you have no skin in the game, you didn't manage to save any money or bring anything to the table. We're going to give it some additional consideration. Not saying that it's impossible, but I have seen that where it's part of the story, part of the presentation of the applicant. But if it's strong income, strong credit history, and parents are gifting, there's no reason why it cannot be approved.
Yeah. So, I mean, in that particular case, they would have a strong income. Maybe the money was lost in some other mechanism, but they need a down payment, but like their income justifies $800,000 mortgage. That would be perfectly okay. That the whole down payment is gifted.
Correct.
Okay, cool. Well, those are all the questions I have.
Right on. Okay.
I can't think of any other way around this. Think of anything. Yeah. I mean, again, we're trying to transfer money from the parents to the kid, but it's got to be through the financial institutions and not like a suitcase of cash or anything.
Correct. Yeah, cash is not acceptable. As long as it's all above board, transferring money from institution to institution, it's totally fine.
Yeah.
One comment that I'll make in closing is, there are 4 cornerstones to a mortgage application. One of them is down payment. That's the umbrella. Where's the money coming from? Where, for the down payment, and gifted down payment is just one of the silos under that umbrella. I find probably the most challenging of the 4 cornerstones of a mortgage application is confirmation of down payment, because banks are regulated by the AML, or Anti-Money Laundering Act. So there's a high degree of transparency that needs to be provided. So we need to get bank accounts with names and complete transparency, which sometimes trips up applicants because it's kind of an afterthought. Yeah, I'm buying, and I've got the income, and my
income's great. I mean, what's going on?
The money's there. Well, who cares where it comes from? Yeah. But it does matter. And one of the hot topics right now that we're trying to solve is sources of money from cryptocurrency.
Right.
Listen, when my mom is asking me about cryptocurrency and bought her first Bitcoin, it's here to stay, okay? But the lenders, just by definition, cryptocurrency doesn't provide transparency.
That's true.
Right? So it doesn't meet the strong AML kind of best practices. And so lenders haven't really figured out how to accept large amounts of cryptocurrency. So just a little comment there. Maybe we can do another video another time.
It makes sense, right? I mean, you can transfer money into the cryptocurrency and transfer back out. In this case, hypothetically, someone needs to convert some of the crypto into a down payment, and it's in their account for like 30 days, 60 days, something like that. Is that acceptable, or basically is still a question mark about where the money comes from?
Great question. The only safe answer here is that money should be converted 90 days prior to you purchasing.
So 90 days, you feel that's, as a rule of thumb, that's probably pretty decent that it's been on side for a while.
That's right. Yeah. In general, anytime we present source of down payment to a lender,
Mhm.
they want to see a 90-day history of where those funds came from. The only exception is a gift because they do not ask for the source account. They don't ask for the parent's bank account statements
Mhm.
to show where that money came from.
Okay. But as long as they came, well, in this case, if it comes from a Canadian institution, I mean,
That's right.
already one step in the chain, so that should be okay.
That's it. That's it. You got it.
Excellent. Well, again, those are all the questions I have. So any other parting thoughts about gifting?
No, it's here to stay. Be clear. Good fences make good neighbors. So discuss with family. Make sure that the intention is correct. That
That's
one day
true.
when you sell, you sell a property for 25 or 50% more than what you bought it. That all of a sudden they don't come back and say, "Hey, remember that gift that we gave you?
Yeah.
Now you made 50% on that. Now we want it back." It happens. It happens. So just be clear on what it is. Most parents love their children dearly and want the best for their kids. So it's not really an issue, but good conversations and clarity make a big difference.
On another question, I guess, what if the corporation gives you money? Is that considered a gift?
No corporation can ever gift.
Got it. Okay.
No gift. I think the way corporations gift are donations, and donations are not an acceptable source of down payment money.
Just curious. I mean, I don't know how it would work.
That's a good question, though.
It's all good. I don't know. Just trying to see if there's other questions leaving for other people. But anyway, that was Chris Mulder from Trilac Mortgage. How can people get in touch with you if they need to ask you some more questions?
Include a phone number, email somewhere here. Chris Mulder, Trilac Mortgage. There's a little calendar on there that allows you to book directly with me. You get a half-hour time slot, all my attention, and the door is always open. Sounds great. Well, thank you very much, Chris, for joining us today. And again, Lawrence Mack, real estate broker out of Mississauga and Toronto. And talk to you next time. Bye.